Welcome, you're watching Countdown on Bloomberg Quint Live, India's first digital live streaming business news service. These are the top headlines that we're tracking at this hour. The markets gained for the fourth straight day. The Nifty trades close to its record high levels. Reliance Communications surges in trade after China Development Bank withdraws its insolvency plea against the company. Indian Overseas Bank gains the most in 3 months after the bank announced its plan to adjust losses of nearly 7,000 crore rupees. And Idea Cellular gains the most in 9 months post its fundraising plan. CLSA upgrades the stock to buy from sell rating.
Well, thanks for those, Navneet. Good afternoon, viewers. I'm Neeraj Shah, and the market seems to be doing okay, about 1/4% in the green. The broader markets too trading with similar gains, 0.5% or slightly more than that. Actually, no, the mid-cap index has now surged even further. So the broader market strength continues. It was about 0.6% at somewhere around 1 p.m. Now has surged a little bit. So the intraday charts of the mid-caps and the small caps would be interesting too. But it's essentially what's happening on the large caps which is interesting. Now, 2 days in a row now, we've had this top column, which is the column of the gainers, or the top row, the row of the gainers, having stocks which are gaining 2, 3, 5% apiece. In today's session too, Yes Bank close to 6% of gains, if I'm not wrong. Yes, 5.9%. Adani Port has done well. The autos have made a bit of a comeback, so to say. Eicher Motors is up about 2%. Tata Motors is up about 1% apiece. So those stocks are also doing well, and there aren't too many losers in the session which are meaningful. So ONGC is down about 1.5%, and the oil marketing companies, maybe largely due to crude or otherwise, are off. But aside of that, no big noticeable losers, and which is why the index is looking robust. It stayed at this 1/3% to 0.5% kind of move for most part of the trading day today, and which is a fairly heartening sign. We are closing the week on a fairly good note, and that is important. And Pradeep, I can safely say that the same is true for the broader markets as well, because the strength and the buoyancy in the mid caps continues.
Definitely, and in fact, if you look at the banks, Yes Bank is topping the chart here. Some of the private sector banks like RBL has also been consolidating for a while, has moved up today with good volume. You have Federal Bank also doing well. So private sector banking, mid-cap banks in particular are doing well today. That is just one of the pockets. There is a relief for RCOM from Chinese Development Bank, though it was anticipated after the restructuring or the repayment and asset sale. So that stock is also moving up after correcting for a few sessions now. You also have a move in stocks like Idea. Telecom sector is buzzing in general. Prism Cement is the cement stock, one of the cement stock that I would like to highlight, quoting at days high now with good volumes. Mid-cap cement rally also continues. Varun Beverages once again in news, doing well today, this time for because of the deal for Tropicana, and also GM Breweries after the numbers. So across segments, there are so many stocks that have been moving up, although there was some correction or a cool off in the index. If you look at the positions in the futures trade also, now the index is once again moving up. But over last few hours in mid-cap space, in fact, people have been building positions on the long side.
Right, Pradeep, so far it was looking like a stock-specific market, but some bit of action is back. If you look at the benchmark indices, both Nifty and Bank Nifty, if you look at the futures and options data, we've seen good amount of build-up coming for both the futures. Nifty futures open interest is up almost 5%, and same is the case for Bank Nifty, which is up almost 15%. So more action actually seen for Bank Nifty, which has been struggling towards that 26,000 mark, which so far has been a very big resistance level for Bank Nifty. So for this index to scale higher from current levels, first it has to sustain above the mark of 25,500, and so far it's managed to do that in today's session. Well, when it comes to Nifty, the big question is, are the bulls back into the market to scale, to actually see more of long positions? But that remains to be seen. Reason being, so far the index was stuck in a range. It's just come out of that range, so 10,550, a closing above that probably could trigger for the higher levels, and the next level to be watched out will be about 10,700 on the index. But in terms of options data, it's looking good because there's a lot of writing seen on the put side. 10,500 put today has seen a good amount of writing over close to 13 lakh shares actually have been added there. The base for this market has been moving higher. Overall, if you look at the open interest concentration on the put side, maximum was at the 10,300. That's moved to about 10,400. On the call side, out of the money strikes like 10,600 have seen some bit of OI addition. But it is the PSU banking lot which was up in yesterday's trade. The PSU banking index has seen a bit of cool off coming about today. So some bit of profit booking has been seen when it comes to the Nifty PSU banking index. And I guess it's also trading almost at day's low with cuts of 0.8%. Two stock futures I want to highlight. Pradeep was talking about the telecom stocks and Idea, which is in the futures and options market. It has gone up on very, very high volumes on the cash side. So do watch out for the delivery data. Even on the futures side, we've seen good amount of long build-up coming about for Idea. The one which is flashing there on your screen currently is Equitas Holdings. That's the other stock future which has done pretty well. The underlying is up almost 6%. And if you look at the futures open interest so far, that's seen gain of nearly 18%, telling you there are a good amount of long positions so far which have been seen for Equitas Holdings and as well as Idea.
Yeah, I mean, cheap NBFCs on a relative basis, Equitas or Jeevan. So seeing some bit of an uptick, both of them, at least Equitas is. Okay. As we've been saying, it's not just what's happening locally, but also what's happening on the global front, which is interesting. Dow hit 25,000 in trade yesterday as well. Let's get you a global voice. Craig Erlam, he's senior market strategist at Oanda, joins us right now on the show. Craig, good having you. Thanks so much for joining in. The momentum is carrying on in 2018 as well. It's an important day today. India GDP data comes out, GDP estimates come out, but we'll have the non-farm payrolls in the US too. How are you, or what is your mood when it comes to how the markets will do over the course of the next 1 or 2 quarters?
Well, I'm quite optimistic, and I think that's what you're seeing from the markets as well. There was a lot of build-up heading into the holiday period, the anticipation that we might actually see tax reform pass through. It's debatable, of course, who's actually going to benefit most from that tax reform, but markets certainly suggest that corporates are going to be a big beneficiary. Now, heading into the new year, that's fully priced in, so it's a case of what's going to be that next catalyst. And we're heading into this first quarter earnings season, and I think we're seeing a lot of optimism about what we're going to see from earnings reports, not just because of the tax reform measures, and people are going to want to hear about what impact that's going to have on future earnings, but also just simply because we've seen a couple of quarters now, both in Europe and the US, that have been very, very positive. And I think people are very optimistic now that the next quarter and the quarter after, and even the entire year, is going to be much the same.
Mm-hmm. But if you look at dollar that has been depreciating, through last year, 2017, dollar kept moving down, and in the early 2018, we have seen the same trend continuing. To what extent do you think it has been kind of, aiding to a risk-on trade, and what happens now?
Well, I think it's been a very interesting move, because ultimately the US central bank has been raising interest rates faster than anyone else. So ultimately you would typically think that this should benefit the dollar. The problem that we've had is the US Federal Reserve was far ahead of the game when it comes to other central banks. And now that we've seen the ECB tapering its quantitative easing program, we've seen 1 rate hike from the Bank of England, we've seen 2 from the Bank of Canada, and it looks like they're going to be a little more active over the coming years. Now, you ask yourself, well, how much of what the Fed is doing is priced in? And I think what we're seeing right now is signs that it's almost entirely priced in. There seems to be a limit on how far they can go, and what they're planning to do, like I say, is priced in. We're seeing that flattening of the yield curve, which is causing some concern. Whereas other central banks have a much longer way to go. And I think what people are anticipating here is they're going to be more active than they previously had priced in. And I think while it's working in favour of their currencies, ultimately that works to the detriment of the US dollar. But I do, of course, think there is that element of the risk-on, risk-off trade playing a part as well.
Craig, the economic data which has come out from Eurozone has been pretty encouraging. There are signs of expansion in economic activity. Yesterday we did have the PMI manufacturing data which was above what the street was estimating. So it looks like the Eurozone economy now is on track. In light of that, do you see more of fund allocation towards that region now?
Absolutely. I think, well, first and foremost, I do think we're in a strong position globally, and I think the global economic environment's positive, and I think stock markets everywhere, pretty much everywhere, are going to see some decent gains over the next couple of years, assuming that we don't run into any unforeseen troubles or any geopolitical risk doesn't arise. I think Europe, it does offer a lot of potential, though. Simply because it's coming from a much lower base than the likes of the US. It took a lot longer to recover from the financial crisis. It had its own crisis with the debt issues in 2011, which have kind of continued in the following years. We're seeing strong signs of recovery in the likes of Spain and Italy, where we're seeing reforms being passed which are positive for economic growth and political stability. France has made some important strides as well, and Germany continues to be a strong area of growth as well. So I think we are seeing very positive signs in Europe, and given that it's very late to the game, that would ultimately suggest that there is a lot more opportunity to be had when it comes to stock gains.
Okay. Craig, what's your view on EMs in India in particular?
I'm very optimistic. Again, I think while there has been some experimental approaches from Narendra Modi with regards to certain reforms, and we saw the demonetisation last year, I think ultimately in the longer term, goods and services tax is another example of this. This is going to be positive for the Indian economy. We're seeing signs of this already. Growth was a little bit lower than we were expecting last year, but again, people are expecting 7.5% growth this year. I think one of the biggest risks for the Indian economy right now is likely to be, for example, the higher oil prices, but I don't think they're going to go too high, and therefore I think any downside for the Indian economy is going to be limited. I think I'm personally very optimistic, and if we can continue along this path of reform, then I see no reason for India to not be one of the strongest growing economies in the world in the years ahead.
Okay, and that would mean that you would be bullish on the Indian markets too. I mean, do you think FIs by and large would be buyers in 2018 in India, because 2017 has seen mixed trends? First half a lot of buying, the second half not so much.
Well, these things do typically happen. We've got to remember, this isn't Bitcoin. Markets don't move typically in a straight line. You have ups and you have downs, but ultimately the trend in the Indian markets, the Nifty, the Sensex, has been higher, and we're now trading, I think, at record highs, and I think that is going to continue. I'm seeing no reasons to believe that is going to change anytime soon. Like I say, I'm optimistic about the global economy and the global markets at the minute. I think when we're talking about pockets of weakness, I think it's more politics and geopolitics that stand out right now. And as long as they don't rear their ugly heads, then I think the global markets are going to have another good year.
Okay. We'll leave it at that, Craig. Thank you so much for taking the time out and joining us, and have a great weekend.
Thank you.
That's Craig Erlam with his thoughts. However, on to corporates, and Subros is a stock in focus. It's gained most in 3 months after the company started supplying to, from what I hear, truck players as well. So let's discuss this in detail with the company's Vice President, Mr. Pramod Duggal, who joins us right now on the show. Mr. Duggal, thank you so much for joining in. Pray tell us, what is this, if I can use the term, the new revenue stream that Subros is starting to do, because you guys have been leaders in cars, particularly to Maruti. What is this new stream that you're trying to develop?
Thank you very much. Good afternoon. From 1st January 2018, as per the new notification, each truck is required a blower application. So there's a new opportunity which is available to us now. So this market is around the 300 to 350,000 number. So this is the number which will be now taken care of.
Okay. So have you tied up with any players, or is this a replacement market or off the market or off OEM supplies? How would this be happening, sir?
Yeah, this would be supplied by the OEM from the manufactured vehicle from 1st January onwards. So we have tied up business with Ashok Leyland, Tata Motors, Swaraj Mazda Isuzu, and Mahindra Truck and Bus. So this business is already in place.
So how many players would be there in this business for now?
I think there are total 6 or 7. Out of that, we have tied up with 5.
Okay, and what sort of market share are you looking at from this segment, since it's new?
We already had tied up business for around 70% market share. So we'll be leading in this segment also.
And are you the sole supplier to all these companies you mentioned?
No, we are sharing some business, but overall we have around 70% share of business.
And what's the overall market share currently in the automotive condenser segment where you have presence?
In PV segment, we have around 40% market share. And for commercial vehicle, we'll be touching around 70.
And any change that has happened post GST implementation in your market share?
Not significant impact on our business.
And what about the aftermarket in that? Has there been any change post GST?
Now it is getting streamlined now. So initially there was impact of 2 to 3 months time, but now it is stabilized.
Mr. Duggal, I want to just draw your attention back to the new segment that you're speaking about. Now,
Yeah.
when are you already equipped to start delivering from day one onwards, or does this take some time?
No, there was no choice given. So we already started supplying from 1st January 2018 and all supplies are already been realized.
So how is this happening? Is it enhancement of capacity utilization which is enabling you to do this, or did you have, or are you in the process of now setting up newer capacities for the same as well?
No, it is a mix of that. In fact, this notification was due from 2000 April 17. So it has actually delayed for implementation. So we waited for 9 months to actually making this realized now. So we already have capacity set up available. So we'll be utilizing it now.
And what would the set capacity? I mean, I'm just trying to figure out if you use the existing capacities for PVs and the same capacity is used for CVs as well, or is it a different unit that Subros sets up for the same?
I'll say that 70% of the capacity is common, 30% would be differential.
Okay, and you'd be operating at what, 80-90% capacity utilization currently?
85% now.
So there's still room to go. You don't need to really set up a new plant until you get further
of
orders.
course.
Okay, and if I can ask you, sir, what would be the annual order inflow that you envisage from this process alone for 2018, since you've started from the 1st of Jan?
So for the next financial year, we are expecting around 130 to 150 crore additional revenue from this segment. And going forward, this segment has a potential reaching up to 175 crores.
And are the margins any different from this segment than your regular business?
Not exactly. This all market is very competitive, so there's no differential market.
It'll be in that range of 10 to 11%, what you've
Of
been
course.
posting so far?
Of course.
Okay.
Yes.
Mr. Duggal, the first half, if I look at the numbers, has been pretty good for a company like yours. You've already more than done the bottom line, which was seen throughout the year in FY17. What sort of second half are you looking at when it comes to the bottom line and the top line growth?
See, overall, we are expecting growth which would be exceeding 15%. We are expecting 15 to 17% growth. So in the proportion of that, bottom line will also improve. It has already significantly improved as compared to previous years. So we are expecting the same trend to follow in the second half.
Okay. Please correct me if I'm wrong, Mr. Duggal, but if about 1550 crores was your FY17 turnover, is it fair to assume that this new commercial vehicle business, if I can call it that, you're starting off, adds about 10% to overall top line, at least as far as FY17 numbers go?
No,
and it would remain constant?
Started only for last quarter, so we can take only 1 quarter incremental impact.
For FY18, yes, but for FY19, it would add about 10% to your overall numbers.
Of course.
And it would stay constant. I'm just trying to figure out that your 10 to 15% growth that you're seeing in passenger vehicles is continuing, but you're saying your commercial vehicle contribution would stay constant at about 150 to 175 crores, or even that will show about a 10-15% growth YOY?
Of course, that is a true assumption.
No, so it will grow over the years at about a rate of 10-odd%.
And that's what I'm saying. It is a true assumption. It would be growing around 10 to 12%.
Even the commercial vehicles bit, right?
Of course, related to our business.
Related to your business, of course. Okay, fair call. Congratulations on this, and thank you so much for taking time out and putting that into perspective. So that's Subros. Well, up 9%, but not without reason. Remember, it's anyways a leader in that whole passenger vehicle segment, so to say. It's a fragmented segment, but Subros has 40% stake, and they're the leaders in supplies to Maruti in particular. And with Maruti's growth, Subros has grown really well. If you bring up the last, 5-year chart, if we can, you will see what I'm talking about. It's just had a fairly decent, steady run as Subros. That's a 5-year chart. That's about a 10x jump. So that's a 200% annualized return that Subros has given over the last 5 years. this is quite stellar. I mean, auto components is one story. To give 200% annualized is a fairly accomplished thing. Over the last 3 years, about 400% as well. So it's been good going for Subros, really, almost at any point of time in the last 2, 3 or 5 years, for that matter. 344 and counting currently, up about 9% in trade. Hey Pradeep, are you throwing the spotlight on Subros today?
No, but we'll definitely do it. Maybe when it gives you an opportunity, it corrects once in a year and gives you an entry opportunity. Otherwise, we'll probably wait for that opportunity if it comes in 2018. But Yes Bank is the one which has actually given us an opportunity. And if you look at it, we did talk about it when it was at around 300 odd levels, and we are reviewing it again because earlier the call was that 300 is a very strong support and it will not breach. It has not really breached. Now today it has kind of confirmed that a bottom has been formed above around 300 levels, and the chart that you can see right now is for last 3 months. The stock has been consolidating in a range between 300 and on the upper side what you have, I haven't really drawn a trend line here. The curve that you can see, the yellow line, is actually 200 days moving average. So the stock actually breached the 200 DMA in October, in the third week of October, and since then it has been consolidating around lower levels, and today once again it has moved back above 200 DMA with good volume. So it looks like it has consolidated for a long time, for around 7 to 8 weeks, and now decisive breakdown has come. It should hold above the 200 DMA, that is around 322 odd levels. So the call would be that you'll probably have a stop loss at around 320 and you can get into the stock. Today, the top that we have seen, or currently where we are, this green line is actually showing you the 100 days moving average. So we are testing it. This will probably be crossed as well because technically we see that 200 DMA is usually more important, and if you have a breakout really coming in, if you have a breakout from a consolidation zone, then probably 100 DMA won't really hold. So this is an interesting stock which has kind of completed a consolidation or a correction process, more of a time correction than price correction over the last 2 months, I would say. Neeraj.
Well, the volumes, Pradeep, for Yes Bank on the cash side today, it's gone up on very high volume. So that's telling you it could be some cash-based buying that one is seeing. In fact, I was just checking on National Stock Exchange. As of now, almost 2.6 crore shares have been traded. That's there on your screen as well. And compare this to yesterday's total traded quantity on NSE was only about closer to 56.6 lakh shares. So that's telling you it's probably some sort of cash-based buying that one is seeing, because I was just looking at the futures data of Yes Bank futures, no major long build-up for a stock, and that too a nifty stock which is up 5 to 6% has seen OI build-up of only about 6%. So let's see, we'll watch out for the delivery data for Yes Bank in today's session, but for the time being, that's your top gainer on Nifty. But let's move on and also put spotlight on India Cement. That stock has gained for the third day in a row. And Neeraj, the mid-cap to small-cap cement counters have been pretty active, particularly in today's session. Pradeep highlighted Prism Cement. KCP we spoke about in the last 1 week has gone up so much. So what's happening in the mid-cap cement space, and particularly India Cement?
So, and you remember Sagar Cement, that note, and HDFC MF buying into it as well. So when I was trying to scan, I thought the note by IIFL was fairly pertinent, and which is why I'm highlighting that. So this is IIFL's view. This note came out yesterday, by the way, and they believe that strong demand has cushioned the price fall for almost all the cement companies. It gives you a lead indicator into what the quarter could be like if IIFL's assumptions are correct. Now they've given some data points about both price as well as volumes that they believe cement companies have seen in the month of December. They say price at the end of December 2017 was 3% below what the expected prices were, and mind you, 3% is neither here nor there, because the eventual bag price at the hands of the consumer is far different from what the reported price on the portal says about how cement is. So keep that in mind. 3% is hardly any difference, to be honest, but the volumes is the impressive bit. Double-digit volume growth in December, and based on what's happened in November and December, they believe that quarter 3 will see low double-digit volume growths versus 0% on a YOY basis. So the demonetization quarter, the cement volume growth was flat. Against that, there is a 13% or a 12% or 11%, whatever it is, but a low double-digit volume growth that is very likely that the cement companies by and large could see. And therefore, the price fall has been cushioned. Now, look at what cement has done this week. I mean, the likes of Prism or Sagar or some of the others have gone up. But India Cements is the interesting one too. I'm taking a larger name out here because you don't want to get confused by a small regional player. Let's talk about a large regional player. India Cements, arguably the leader in southern India. And look at what it has done. The last 3 days, it's been moving up. It, of course, is at a discount to peers as well. A lot of buy calls, hardly any sell calls. And this would probably be true for almost all the cement companies. But the interesting bit is, one, the volumes in India Cements in today's session. Let's just bring up the volumes in today's trade for India Cements first. And then we'll do a GIP3 and show you what the stock has done over the last 3 days. This is first the volumes. And look at how the average volume in today's session is substantially higher than the average volume for the last 20 days. Certainly shows the kind of buying. And now let's enter the GIP3 command on the terminal and show you what the stock has done over the last 3 days. It started off lower on Wednesday, and gave you ample opportunity to buy if you wanted to. This is where the note would have hit the markets, but the stock in 3 trading sessions has given 10%. This week, Sagar Cement, I think, has given returns northwards of 30%. Prism Cement, combined today and yesterday's returns, has given returns of about 15 or 16 odd percent. So clutch of these cement names are moving up, and even large caps have performed. So keep in mind, maybe this is buoyancy ahead of what could be a very good quarter. We'll get to know once the quarter numbers are out. But suffice to say that there is quite a bit of buying in a sector which is not completely cheap. India Cements may be cheap. The sector by and large is not looking very, very cheap. I don't know, Pradeep, what your charts or Navneet, what the FNO indicators might be indicating, but there's certainly buying that we've seen, and cash market buying, I would reckon, that we've seen in a lot of these cement names.
We discussed India Cement yesterday, and there was definitely an indication that it has started the next leg up. And probably the target could be much higher, here on, because it consolidated for a while and looks like it's now all set for much higher levels.
And it's cheaper, Pradeep, than some of the other players fundamentally as well. But I mean, would that be true for cement as a pack? I mean, are we seeing buying and consistent buying across the pack? We've seen it for the last 2 or 3 days, but I don't know what supports do they trade or what kind of open interest build-up that we've seen.
Well, today and yesterday's rally for India Cement has been on back of short covering, and also we've seen, individually, as you mentioned, there are a lot of brokerages now which are coming out with the note. You had Ramco Cement, that stock's been rallying. So probably the sentiment now is pretty much bullish, and if I'm not mistaken, this is seasonally a strong quarter also for majority of these companies. As we enter, the construction activity is going to pick up. I think the IIFL report also highlighted that because of elections now, you'll see the construction activity from the government also picking up. So probably we're entering into a time where prices may go up. That's another assumption, because in December, on an average basis, I guess they were a little lower, but not that low. Maybe traders who would have shorted these counters are just trying to cover their position right now. The fresh leg of buying maybe is yet to come, but maybe on the cash side, you're right, Neeraj, the volumes have been pretty high for India Cements.
Now, I was looking at the delivery volumes for a couple of these cement counters for the last 2 days, and there has been some delivery-based buying into not the large cap names, but the mid-size names for sure. I mean, Sagar Cement is a case in point, frankly.
Sagar, Ramco, KCP, all of them have rallied between 15 to 20% in the recent past.
Yeah, so it's been interesting. Let's wait and watch if this lasts or no. But India Cement, certainly 10% in India Cements is not a bad thing. And I can assure you, this is not due to Chennai Super Kings returning to
I was
IPL
just about to ask that, and also Dhoni returning to the team.
Or the team returning to IPL.
Okay.
More importantly, but no, I don't think that's got to do with this. It's some cement-related points.
This is also a company I'm not very sure with the numbers, but they've been tackling with their debt issues as well when it comes to the balance sheet. So they've not been able to bring down their debt. That's substantially what the kind of guidance they've been giving. But let's see how the numbers pan out. That's about the cement space as of now. And just want to sorry, Neeraj.
No, the flash is on our screen, Navneet.
Okay, so there's some important flashes there on your screen from Doordarshan. Union budget will be presented on February 1st, and that's the final confirmation which has come from Doordarshan that the union budget for this calendar year will be presented, or either financial year FY19 will be presented on February 1st. But before we move on to our experts, I want to pull up United Spirits and pull up the intraday chart of that company. There has been a sudden surge which is coming for United Spirits, 7.5% higher, inching very closer to the 4,000 mark. I was just checking the data. The all-time high for United Spirits is somewhere between 4,082, which was seen in 2015 in the month of March. And you know what, since the time Diageo has checked into this company, I think it was somewhere about 2011 or 2012, they've not made money. I think now is the time that they've actually started to make money in terms of the stock price movement. And obviously the numbers for the last quarter were pretty strong, post which there were a lot of bullish commentary coming from a lot of brokerages as well, that now is the time to buy these liquor companies because of premiumization. And for the first time in the last 3 to 4 years, these companies have managed to increase prices in a couple of states. So we'll get some view, fundamental as well as technical view on United Spirits, which has just surged in the last 10 minutes. And as we speak, the markets are also holding up to their gains. So that's another good news. 10,544 is the level where Nifty is, and Bank Nifty is right now pretty much holding above the mark of 25,550.
I'm just wondering, so you know, United Spirits and almost all the other spirit companies, me and Pradeep were talking about it in the morning. Yeah. That too. The
numbers were pretty good of GM Breweries. Maybe that's just set the tone for the Q3 earnings.
Yeah, it just gives you a sense of what's happened for the space. Now, you know, if GM Breweries has seen 13% margin expansion, 1,300 basis points, that doesn't mean United will see the same. But it at least tells you that the raw material cost for the brewery companies has come off. And frankly, if molasses has come off, it will favor the pure play distilleries a lot more. And here we have a brewery company which has given this margin expansion. Now you got to think of what would happen to a Som distilleries. I don't want to mention a Pincon Spirits. That stock is caught in a lot of other messes, and therefore that may not be a pure play, fundamental play. But small names, Som distilleries. We've seen a bunch of people get into Radico Khaitan investing as well. And that's a play that is coming out of trouble, right? A lot of debt, deleveraging, consumer company now starting to spread its wings, and arguably the second largest player in this space after United, by a wide margin as number 2, but still a number 2. So it's very, very interesting. While United is doing what it is doing, to keep an eye out on some of the others. Radico is at new highs. I'm guessing Som Distilleries has done well. GM Breweries 14-15% higher. It promises to what could be a very, very interesting quarter and maybe a great 2018. For the spirit companies.
Looks like GM Breweries is now locked in upper circuit as we speak. It's up almost 20%. And multiple factors, Neeraj, as you mentioned, raw material premiumization has been another theme. We've not seen states increasing prices, which has just come in from the last financial year. The biggest overhang was the highway ban, which came about. Yeah, that got lifted. And after that, I guess the sentiment has changed for the entire sector. And especially United Spirits, let's see how the numbers pan out, because that's going to be pretty interesting post the second quarter, which was pretty strong for all of them. And looks like GM Breweries today has set a positive tone when it comes to the numbers of all these liquor companies. So up 20%, 1171.
Yeah, and my producer has got that one stock wrong, Pincon Spirits. That's not a result of what's happening to business. That stock is down because of a lot of other factors. Anyways, but since this is a space which is active, let's ask our technical experts as to what they make of that, as also their stock ideas. Hadrien Mendonca, who's Senior Technical Analyst at IIFL, joins us right now on the show. Hadrien, we will talk about the spirit companies, but as is the norm of the show, let's first start off with a call or your view on the indices. Couple that up, of course, with 2 stock trading ideas from your end.
Yeah, Neeraj, finally there is some cheer on the street, the New Year cheer, I mean, and finally Nifty has also broken out from this inverse head and shoulder pattern, which I was actually looking out for the time when I had come previously on the show. So finally, the 10,520 mark is broken and convincingly sustaining above the same. And I think Nifty is all set to rally towards the 10,620, 10,640 zone going forward. So the trade definitely is go long, and your stop prices has to be close to the 10,390. That is very crucial support zone, and even the 21-day moving average that will act as a strong support. So long positions, if any trader is holding, continue to hold long positions, and if you want to buy, it's not too late. We still have a lot of room pending on the upside to play for. As far as the trades are concerned, I'm pretty bullish on another IT, that is Hexaware. The stock has given a beautiful consolidation and in fact a continuation of its previous primary trend. So the breakout is actually implicating that we could see a target of 380 in the short run. Keep a stop loss of close to 352. My second call is I'm bullish on Ujjivan, Equitas as well. Both these stocks are doing pretty well, but Ujjivan seems to be more promising. After the breakout which we saw yesterday, I think the momentum has seriously been carried forward today. We've seen good backup buying and delivery-based buying also happening. So Ujjivan seems to be a good bet at these levels. Can play for a target of 421 and keep a stop loss of 404.
Okay. So these are the trading ideas coming in from Hadrien. Sarvendra Srivastava, independent market expert, also joining in. Sarvendra, what are your top stock ideas?
Yeah, very good afternoon. No, we are going with a broad theme that we have been continuing for the last month and a half. And what we are saying here is that this is now the 5th to the 6th week where the Nifty is still struggling around that 10,500 mark. So my sense is that definitely there's a loss of momentum. If I go and look at stocks, individual stocks, there's definitely a decaying. And even though indicators are in some cases indicators are above average lines, but there's definitely negative divergences which can be seen. So on the index, I would reiterate and maintain the stance. I think we are still around those levels where we discussed last week. So we'd say that we will believe that market will slip towards 10,000 and 9,700 eventually. The next 0 to 3 months is this trade, and I would keep a stop loss at 10,756.60 on a closing basis as a stop loss for that. And incrementally, any rise probably will give you a better risk reward than yesterday to short. So the bias remains more negative. Only one buy trade again, which is Equitas. Definitely the stock looks oversold, and the way it has set up on the monthly charts, I think definitely a case for a good, decent, medium-term bottom. So even though the stance remains negative, I think this stock could outperform. So look for a target of around 170, 172 for Equitas on the long side. Keep a stop loss there at 142.40 is what I would recommend. And the remaining two trades are on the sell side. First one being from the OMC space, IOC, where overall we believe that the way crude is behaving, and we are still targets which are pending on WTI at around 70, 72 levels. So we are still at 62. So another $10 odd probably to go, $8 to $10 on the WTI to go on the upside. I would definitely believe that OEMs will suffer. So look to short sell for a target of there at around 365, and keep a stop loss there at 390, 310 on IOC. Next one is a sell on Century Textiles, where we look to short sell again for a target of around 1390, 1395 on the downside. Keep a stop loss there at 1448.10.
Okay, we're talking about the brewery companies, so let's talk about those first. Hadrien, any thoughts here? United Spirits or Radico Khaitan, or for that matter, Som Distilleries. I can't ask you about GM Breweries because that's locked on a 20% circuit.
So you've got United Breweries too, which has gone up now 6 to 7% higher.
That too. Hadrien?
Yeah, McDowell's, my favorite counter, trading bet that I always like to bet on. United Spirits, I'm talking about, is on a tear actually. In fact, it has given a fresh breakout, and I'll definitely vouch for a fresh all-time high on a McDowell's. So the trade definitely should be remain long on the spirit company, especially McDowell's, because the breakout is pretty promising. And if you see the previous trend, it is solid, a higher top, higher bottom structure. That's what you need when you're a trader. So you try and buy the dips. So the strategy overall on McDowell's should be buy on dips. If you're holding long, definitely hold on to your long positions on McDowell's.
Okay, so a long position on McDowell's or United Spirits says what our experts are recommending. The other spaces which also look interesting, and I think Anand Tandon, market expert, is joining us now. Let's take his ideas as well. Anand, first of all, do you have a view on liquor stocks? I hope you track them. No, I think Anand is not able to hear us. We'll try and get back to him. In the meantime, the other space that we have been discussing, Hadrien, is cement. Some of the mid-cap cement names like Saga Cement yesterday and Prism Cement today is doing well. What's your pick from this
Yeah, I'll actually go with the more stable India Cement because the weekly charts that I am observing currently, we've seen this very, very beautiful channel breakout, on the weekly charts. And if you see the volumes and the delivery-based buying, both are actually, behaving as a good backup of the breakout that has already happened. So today being Friday and close of the week, with India Cement closing close to the 198-200 zone, I think it has comfortably confirmed that it has broken out from this weekly channel pattern, and I think definitely long positions have to be held on to, and your short-term target on an India Cement by next week should be close to 218 to 222.
218 to 222, that's the target of India Cement by next week is what Hadrien is suggesting. Let's touch base with Anand Tandon. Hi Anand, Pradeep was trying to take your view on the liquor stocks which are buzzing in today's trading session. Do you have anything in this space which you like?
I'm not sure about individual stocks, but generally, that is one of the better spaces to be in terms of consumption. Of course, it's already valued like that for most places. So I think if you look at the broad theme for this year, I would argue that with the return of inflation possible over the next 12 months, consumption space would be one place where price increases can be more easily taken. And therefore, it's very likely that that theme which has been kind of subdued for the last 12 months perhaps will come back.
Anand, good afternoon, Neeraj here. It's a very wide basket. I know you don't comment on specific stocks, but I just want to drill this down a bit further. This whole liquor space and distilleries stroke breweries, the tailwind that comes in as a result of, one, the raw material costs coming down, or two, the impediments like the highway ban being overturned as well, and being a part of what is arguably a nascent growing market. Does this make this a multi-year story, or you think it's difficult to give such a call? Because typically consumption stocks tend to get this multi-year valuation premiums. The same can be said for liquor companies as well?
Well, they're already getting it. You are looking at United Spirits, for example, trading at probably 50, 60 times 2 years forward earnings, that to forecast earnings. So it's not like they are not getting that kind of valuation. And I think justifiably so. Frankly, anything which is habit inducing and forces you to spend money is good for business. So, we have seen that, the business of ITC is similar. It creates a habit, and therefore, which is very difficult to get rid of. And therefore, the earnings at least continue to come through. The problem with liquor always has been that the distribution and the production is completely and tightly controlled by the government and in each state. And that makes the business actually one of, as many states as India has. So it's a little difficult to have companies which can operate across all the territories. And that is why we are having situations where the foreigners at least are trying to make sure that the lower end of the curve is something that they get out of in the form of franchisees and let them handle the local politicians and so on, whereas they focus only on the upper side. So you would have to pay a premium for a business which is already existing, provided you have some reason to believe that there is not too much siphoning going on. You have to remember that since it is produced at the instruction of the government and sold to the government, there will be underhand dealings. So there will always be an issue of corporate governance in all these companies.
IDEA is another stock which remains in focus for second day. Anand, how do you really see it? Some people have been interpreting it in a way that if promoter is bringing in 3,000 crore, it's a good opportunity, and that is why maybe traders and investors are also active. But are promoters bringing in money because there is an opportunity, or is it more out of compulsion?
I think if they don't bring in money into IDEA, it will be a very bad idea. But the reality is that I don't think that, the telecom wars are over by a long shot. So long as Reliance doesn't get at least their natural share, let us assume that there are 4 players who are left in the industry after the consolidation. At least the revenue share of Reliance should be 25%. Right now, we are about half of that. Maybe it's about 14-15% now. So I don't see how you're going to have a situation where till at least you get your own market share of revenue, a giant like Reliance will keep quiet. And after that, given the kind of investment that they have made in the industry, I don't think they're going to be happy with an equal share. So I think there is going to be continuous warfare going on in that industry. I think we should continue to enjoy it as a consumer rather than try and become investors in it.
Anand, the other pocket which is doing pretty well in today's session are a couple of your mid-cap to small-cap cement counters. So we've now seen Sri Cement also going up in today's session. If we could just pull up the chart of Sri Cement. I think we'll touch base with Anand. There seems to be some issue with that line, but Sri Cement is also trading around its day's high level. And besides that, there are a lot of counters which have seen substantial gains. One of them is IDFC Bank. That too has seen gains of almost 6 to 7% alongside Justal. I think Anand is back with us. Anand, I was asking about the mid-cap cement space. You know, some of the analysts call it a proxy theme to play the affordable housing theme at large. How do you see the prospects of these companies? Because there are some reports indicating that the next 2 quarters could be strong. The demand is coming back. Would you bet your money in this counter, in this space?
Well, I think, whether it is affordable housing or roads, I don't think the companies know or frankly care. As far as they are concerned, can they sell an X amount at a certain price? And that is something that seems to have happened in the last quarter. Whatever we hear from various companies in the quarter that's gone past is that there has been fairly strong business growth. And if you assume that at least some of what the government has been indicating in terms of a huge spend in infrastructure were to come through, then at least cement is something that will be required. So I think, if you time it, if you were to look at the sector has got strong tailwinds. And, if you don't worry too much about the valuations, even the frontline companies can be bought. If you are worried about the frontline valuations, then obviously the smaller companies are the place to be. And there are lots of them which are still valued relatively low in terms of capacity per ton. We have to only wait to see if their EBITDA per ton improves or not.
Okay. Anand, stay on. You might be interested in this conversation as well. I certainly am, because if you just look at the fertilizer sector, and if the stock markets are to be believed, there is a lot of flavor going ahead. But we thought it best to get a fundamental perspective from Satish Chandar. He's the Director General of Fertilizers Association of India, and is joining us now on the show to talk about 2 or 3 pockets that we wanted information about. Mr. Chandar, thanks so much for taking the time out. Before I come to DBT, and which is the burning topic, yes, there are a couple of things that have happened which I wanted your view on. I think one of the companies or some of the companies have asked for interest waiver and loan waiver. Maybe these are some of the PSU fertilizer companies or companies across that space. Okay, I think we just lost Mr. Satish Chandar. We'll try and get a sense from him as to what's happening. One is this whole loan waiver that companies have been asking for. 2, I think there is a change in the norms when it comes to the subsidy that they get for power. Okay, I'm told Mr. Chandar is with us. Mr. Chandar, can you hear me?
Yeah, I can hear.
Great. Mr. Chandar, thank you so much for taking the time out and speaking to us at Bloomberg Quint.
No, it's nice. Welcome.
So 3 issues that I personally wanted information on. My colleagues would want, I'm sure, some more ideas about too. But there's this one company, Madras Fertilizers, which I know has asked for total interest waiver and loan waiver as well. Have there been other companies as well which have asked for the same? And would you believe that the government would be obliging or rather giving out those waivers as well?
These are public sector companies. If you look at Madras Fertilizer and FSCT, these are the public sector. So these are fully owned by the government of India. So some waiver has already been given. Okay. Some loans and interest has been written off. Okay. But that's only to improve their balance sheet. Okay. So basically nothing much has changed as far as these companies are concerned.
Okay, fair call. I also heard somewhere, sir, and you'll be able to throw some light on this, that there's a particular norm about reaching a particular capacity of power generation without which the power subsidy would not be available to fertilizer companies, and that has been deferred by a couple of years. At least I'd heard the fertilizer minister as having said that a month ago. Can you tell us what this issue is about?
No, as far as power is concerned, all our fertilizer plants are having their own captive power plants. So probably what you may be referring to is the production by the urea units and beyond reassessed capacity. So we have the issues with the urea production in the country. And as you know, this is fully controlled by the government. The farmer price, MRP, is fixed by the government. The cost of production is determined by the government. So our prices have not been revised since 2002 and 3. And this has been pending with the government for the last 5-6 years. though we had a cabinet decision in 2014 which gives a small relief to the urea units, 350 rupees per ton and 150 rupees per ton for the old plant, vintage plant, which are more than 30 years old. But so far the companies have not been paid. So urea business as a whole, though this is a very efficient industry, Indian industry is one of the most efficient. But since everything is controlled by the government, more than 50% of the units are making losses in urea production.
Okay. And
so that may be in that context where this fixed cost has to be revised. And we are paid based upon the cost data of 2002 and 3. So you can imagine 15 years, since 15 years.
But is it happening? Is it happening, Mr. Chandra? I mean, this is a sensitive issue. Do you think a revision is on the offing?
No. As I just mentioned, already the cabinet has decided. This has gone through a long process.
Right.
Through the group of ministers, and then finally cabinet approved and notified on 2nd April 2014.
Right.
But payments have not been made to the companies. So with the result that today urea production, more than 50% of the units are making cash losses. And next year, the energy norms are also going to be revised, made more stiffer. Now, if these two things are not addressed, the urea units face a very, very gloomy, I may say.
Actually, we hear, Mr. Chandra, we hear that there are good times in store as a result of a number of factors, including DBT. I mean, the pilots have worked out very well, and it solves the cash flow problems in a big way for the urea manufacturers as well.
No, the fact is, as far as the DBT is concerned, there's only a change in point or the procedure of payment of subsidy to the units. And now it will be by purchase by the farmer. So immediately there are many issues. And since the pilot districts have started more than 1 year ago, so far the companies have not been paid. So it's a big challenge for us, both on the DBT regarding the payment is concerned, and secondly on the GST also. We have inverted duty structure as far as PMK production is concerned. Where input tax is 18%, output now reduced from 12 to 5%. So we have to take all the refunds. So the companies are not getting that. So there are many challenges both in DBT as well as on the GST.
Under DBT, you said companies are not paid, but I believe under DBT, actually, the farmers will get the money?
No. Under DBT means that the subsidy will be paid to the companies. It will still be routed through the manufacturers. But it will be only paid when the farmers actually purchase the fertilizer. Till now, it was on receipt once the fertilizer reaches the retailers, we will get about 90% of the subsidy. Now it is by purchase by the farmers. So in a way, now the industry will only be paid during the consuming months. Now we are paid almost all the 12 months. Now this will be only paid about 4 to 5 months when farmers actually buy the fertilizers. But there also the system has not stabilized. And as I mentioned, even in the pilot districts where our payments are stuck for more than 1 year. So this is a huge challenge for the industry in BT also.
Otherwise, has pilot been successful? That is what some of the analysts would make us believe, that pilot has actually been successful and the system is in place. Maybe there are only delays.
No, I mean to say that they are successful in the sense there are a lot of issues by purchase by the farmers. There are the issues of connectivity. There are the issues where a farmer has to stand in long queues, etc., etc. So the systems have to be strengthened. They are working all right, and we are working with the government to make it success. But to say that they are working in a very successful manner will be a premature statement. That stage has not come as yet.
Mr. Chandra, just wanted to get an update on the fertilizer subsidy disbursement. I guess for FY18, the figure was somewhere about 70,000 crore. How much has been disbursed and how much is pending?
You see, when we started 2017, we had an outstanding of about 30,000 crores. Now, this year, the budget was 70,000 crores, and last year we got a banking arrangement of 10,000 crores. Means paid last year, but not available this year. So actually, the budget is 60,000. And as per our latest information, this has been cut by another 5,000. So actually the budget is reduced by another 5,000. So this outstanding remains a major issue for us.
Outstanding now, Mr. Chander, 65,000?
No, I'll not say outstanding 65,000.
Okay.
They should be around 25 to 28,000 as of now. And in case we don't get additional money, then these will increase by the end of March.
And have you had, go
I'm
ahead.
just saying the fertilizer minister was on record saying that it was 23
Okay.
and they hope to clear up all the arrears by March.
Okay.
You are absolutely right. The Honorable Minister did set there 23,000. All right, there can be a difference in assessment whether it's 23 or 28. Even assuming 23,000 is there as of now. But if an additional grant doesn't come, then these will increase. And our budget has been cut by another 5,000 crores.
Is
Already,
there,
I mean, this, yeah.
just want to get a check, Mr. Chander, since a lot of these fertilizer stocks have been going up in the last few sessions, is there any positive development which has taken place in your sector?
No, as far as the stocks are going up, you know how the stock market operates. That is one. Secondly, our companies, in order to survive, they are doing a lot of non-subsidy business. So they are selling other inputs, they are selling seeds, they are selling pesticides, etc., etc. But there are other factors which govern the stock market. But as far as the margins and the returns are concerned on urea industry, as I told you, being one of the most efficient in the world, more than 50% of the units are making losses, cash losses in urea production.
Chandra, quickly, just one last question. Has the pre-budget meeting for the next budget already happened between the Finance Ministry?
Yeah, it has already happened. And we have raised all our concerns.
If you could share what were the key things that you were discussed?
You see, in the pre-budget meetings, we raise our issues. And of course, answers are not given there. So we have raised our issues of timely payment. In fact, we have raised the issue of the policy where we have said that please don't route the subsidy through the industry. Give it directly to the farmers. And this responsibility we have been doing for the last 40 years. And now the industry is suffering because of all this subsidy policy and subsidy being routed through the industry. And then we have raised the issues of inverted duty structure as far as GST is concerned. We have also raised the issues of the DBT, where the infrastructures, etc., have to be strengthened. Because if the sales through the POS machine is not captured, and if the retailer doesn't sell through the POS machine, then the subsidy on urea, which is 70%, we lose that. So there are very serious concerns which have been highlighted.
Thanks, Mr. Chandra, for taking time out for us. So that's interesting. Fertilizer industry, or the manufacturers rather, want a direct benefit system to be really direct and reach out to the farmers, and the subsidy not to be routed through manufacturers.
Well, that's right. And let's actually get a view on the sector from Anand also. Anand, you heard Mr. Chandra, Director General of Fertilizer Association, talking about what's exactly happening in the sector. What are your views? Because we've seen a couple of these stocks going up in the recent past. Do you find any value there?
I think if you leave aside urea, I think complex fertilizers may have some value. There the subsidy elements are not so high and more easy to understand. I think what he pointed out, one thing which is very important is that there is a change if you actually were to do DBT. The working capital cycle will go up tremendously, because right now the manufacturer only has to get it out of his system before he is able to claim subsidy. There it will actually be based on sale, and that's that's going to increase the cycle time so much that only those companies which have a very strong balance sheet and have the ability to service the resultant debt will actually be able to survive. So I think as he mentioned, if they were to actually do the DBT directly into the farmers' hands, that would be useful, because that will also put pressure on the government to make sure that the amounts don't pile up because of obvious pressure from the farming community. Whereas the industry has a less strong ability to influence the government decision. So broadly in the fertilizer space, I think you have to look at non-urea companies, and especially those which are also into other farm inputs.
Okay, that's about the fertilizer space part. Let's move on to the buzzing stock of the day, and that's Prism Cement. Nikki Mirchandani joins us with more details on that. Nikki, over to you.
Hi Navneet, with bunch of cement stocks, Present Cement is also rallying. It's gained as much as 20% to its record high level. Look at the volume, that's an impressive figure there, 27 times its 30-day average volumes that we're looking at for this counter. The main reason we are here to do well, the company has had a one-on-one investor meet with East India Securities yesterday, and also there is a report from a brokerage, Antique Stockbroking, which says that the busy season has set in and these players are expected to take a hike since it's the start of the new calendar year, and usually the construction activity picks up. It's a busy season for the cement companies. But then notably, the price hike have already happened. In the month of December itself, you've seen the central region as a whole, which has hiked the price in the range of 7 to good 12% on your year-on-year basis. That's the brokerage's dealer check, and even on month-on-month basis, it's a good hike that we're looking at for the central region as a whole. That is in the range of around 2 to 4%. So yes, price hikes have been taken in the month of December, and also we could be looking at a better season since the construction activity usually picks up around the start of the calendar year.
Thanks, Nikki, for these details. So that's Prism Cement. Cement stocks have been doing well for last few sessions now. Another segment, Anand, that we've been focusing on today is private sector banks, the mid to small private bank, although still, relatively they are quite big. So look at what is happening to RBL. After several months of consolidation, the stock has moved up. Federal Bank also is doing well. Yes Bank has been consolidating for a few months again, is moving up. Is focus now coming back to the private sector banks that were consolidating for a while, and is there some value here?
There is no value there. There is growth that you're looking at. So if you're really looking for where the next value can be, I would imagine that is the corporate banks. Of course, since most of the corporate banks are public sector and publicly owned, there is a question as to why they should exist in the first place. So therefore, you are forced to necessarily look at the private sector banks. By and large, none of the banks are cheap. If you have to look at private sector, I would say just go back to HDFC and Kotak Bank. I mean, at the end of the day, they have delivered very well, and there is no particular reason that one should be looking to be more adventurous. But as I mentioned, no valuation arbitrage there, simply a question of where the growth can be. At a strategic level, I think private sector will continue to do very well and gain market share from public sector. But from a near-term tactical point of view, you may make a little more money on the corporate banks. Basis that this year you are expecting to see many of the banks actually turn around and stop having to bleed because of the various provisions they've been making, and to start to show some gains in the bottom line.
Okay, Sarvendra, are you going to pick Yes Bank or RBL if you have to choose between the two?
See, if I have to choose between the two, I'll probably go with the RBL. I think there the setups are more clear in the sense that the risks of a leg down probably are slightly lower. Even though when the market overall goes down, I think everything will correct. But RBL definitely has more bullish setups than Yes Bank. Yes Bank to me seems to be pulling back into a right shoulder of a fairly large distribution, bearish head and shoulder formation. So the shoulder can pull back a little more. So that can definitely be the case. But for Yes Bank, I think this bounce probably would be used to short if at all I have to do it from my end. So I will be probably shorting a Yes Bank and then buying RBL. Probably that pair will also make sense.
Okay, that's the technical view on Yes Bank. Let's just pull up Link Pen. That counter has rallied almost 14%. Let's just look at the intraday chart. The gains have actually come in the last 1 hour or so. So it's very close to getting locked in upper circuit, up almost 16 to 17%. We were also speaking to the management of Subros a while back, and let's just pull up that counter. It's now locked with gains of, it's locked in upper circuit. It's up almost 20% post our interaction with the management. But there are whole host of buzzing stocks, but which are the Fab 4 stocks of the day? Let's go across to Yash Upadhyay to find out that. Hi, Yash.
Hi, Navneet. So we kick things off with Varun Beverages, and the stock had gained as much as 9% today after the company said that it has entered into a strategic partnership with PepsiCo India for the sale and distribution of its entire range of Tropicana products, which includes Gatorade and Quaker value-added dairy in the north and eastern parts of India. GM Breweries is in high spirits, and the stock is locked in a 20% upper circuit today after the company announced an operationally strong set of Q3 numbers yesterday post-market hours. Net profit saw 120% jump up, while margins almost doubled to 29% on a year-on-year basis. Jubilant Foodworks is up almost 4% today after Jefferies came out with a note initiating coverage on the stock. They have assigned a buy rating and have set a target price of 2,200 rupees, which indicates an upside potential of almost 20% from its previous day's close. And finally, we have Gravita India, and the stock is up about 6% today after the company said that it has started commercial production of tetra lead oxide at its new plant in Jaipur for a total capex of about 180 crores. Now, the plant has a total capacity of 7,500 million tons per annum, and the chemical has application in various segments like ceramic tiles, inverters, and solar batteries. Over to you.
Thanks a lot for that, Yash. Anand, before we let you go, and then I'll ask the same question to Sarvendra as well for the charts. But Anand, since we're talking about consumption, just a brief mention on Jubilant. And again, not asking for a stock call here, but do you believe this restaurant stroke consumption space in this format can do well? Because we have seen that while there was a temporary disruption in Jubilant under the old management, I think once they've changed the management, the momentum in business is returning, and it's showing in the way the stock is doing as well.
Well, I have some reservations about what one can do with QSR kind of formats, and I am yet to be convinced that it is something that is sustainable. I think if you are looking at the consumption theme, your earlier theme of drinking and being merry is perhaps a better way to play it.
Fair call. Anand, appreciate that. We'll let you go. Thank you so much for taking the time out and being with us today. We've had a patchy discussion, but nevertheless, always good having you. But speaking of Jubilant, the stock is active. Sarvendra, last couple of questions to you. Firstly, a word on Jubilant.
Absolutely. I would probably, with the fundamental guy, I would kind of agree with the last statement that it's better to be drinking merry than probably this one. I think the move has been a scorcher, right from 1,000 odd when it panicked with some bad news. From there, within no time, I think within 6 odd months, it is now at 1,900. So it's grossly overbought. So from here, a fresh risk reward would be difficult to set up because your trailing levels or your stop losses level will be far off, close to 1,600 odd. Would be a decent medium term kind of a number if I have to kind of figure it out. So slightly overbought, but if someone already has a trade, then probably hold on and look for another 100, 200 rupees on the upside. But beyond that, I think with this kind of momentum reading, would be very difficult for this to scale up. So risk rewards probably at around 1,600, you could look at buying if it dips.
Okay, that's the view on Jubilant Foodworks. The counter has actually done pretty well in the past few months. But what is also doing well are the Adani Group stocks. Pull up Adani Enterprises, Adani Ports, Adani Power. In fact, Adani Enterprises is up 5%. And I guess today is the third straight day of gains for this counter, up almost 5% and almost at day's high. Let's just pull up the other group companies as well, Adani Ports and Power, and see if they're doing good. Adani Power is also trading with gains of almost 5%, and Adani Ports, which is your Nifty counter, is up over 3%. Sarvendra, if I were to ask you to pick one company out of the three to take a fresh long position, which one looks the best on the charts?
I think I will go with Adani Power, the smaller name, but definitely I think the quarterly, monthly setups on this one should be driving it up close to around 60, 62 levels in the near future. 6 to 9 months would be the time horizon, and I said pretty strong bottoming out formation. So this could actually end up being a stock which could give you or deliver more, which means the stock has fallen, was once a 150 rupee plus kind of a stock. So if the bottom is already in place, which the signatures probably are now coming, my sense is that might as well buy and hold for next 24 to 36 months as well and look for targets in the region of 100 plus. But for the time being, if someone wants to trade 6 to 9 months, I would say that 60, 62 is doable. And among the three, it is the best looking name to me at the moment.
Okay, that's the call on Adani Group stocks. Rajat Sharma, CEO at Sana Securities, is joining us now on the show. Rajat, some of the segments we've been talking about, the mid-cap banking and a PSU bank, IOB, which is in news today because of their accounting policies. Two things. A, that probably market always discounted the book value. They knew there is a lot of loss and potential loss and provisioning. And also, if you look at it, this is just kind of a book adjustment. Not really a big positive prima facie, but market has actually taken it positively. What is the reason, do you think?
Yeah, no, so, in banking, I'm sorry, I couldn't hear the first part of what you said. You were talking about which bank?
IOB is the stock which is in news today because they've decided to kind of write off some of their losses against the premium account.
Yeah, no, that's correct. I mean, I think IOB and a lot of these other PSU banks, you'll see the NPAs are so high, and I personally don't see any reason why, you should be looking at buying them or why things could improve. The only banks that we have investments in are in the private sector. Recently, we added Federal Bank to our portfolio, and amongst personally, I believe you should stick to private sector banks like HDFC and ICICI and Axis. You should buy these banks in your portfolio and hold them for a long term. Right now, where we are, I do see some of the smaller private sector banks will could do well because they've not really done anything for a very long time. Federal Bank is one example. They recently closed a QIP at 116 rupees a share. So if you see the growth, if you read the management commentary, the way they're planning to expand in the next few years, these smaller banks would possibly do very well because in India the growth is there. There's no doubt on that. Banking still remains, a lot of India still remains underbanked. So a lot of these smaller banks which are available cheap could actually outperform going forward. Private sector banks, other than these smaller banks, if you look at HDFC and ICICI and Axis, right now we find them to be extremely overvalued. So not really looking. In fact, we've cut exposure to some of those banks. We just added Federal Bank recently to our portfolio.
Okay. By the way, I'm looking at stocks which are at new highs. Just taking a couple of questions with our technical experts and then go on to Rajat as well. And before I get to our technical experts, let's get to Navneet Saluja with a sense of stocks which might enter the FNO ban or come out of the FNO ban. And Navneet, I'm guessing the list is looking really long today.
No, not at all. It's Friday. I just got one stock on my list. And we spoke about Reliance Communication yesterday that it'll come out of the FNO ban, which it did. But after coming out of the FNO ban, there has been huge build-up on the futures as well as the option strikes of Reliance Communication. So as of yesterday, it did go below the mark of 80%, and that's how it came out of the FNO ban. But if you look at the data, currently it looks like it may once again breach the 95% mark to get into the FNO ban period for Monday's session. So watch out for that counter. It's been pretty volatile. The start of the week was more about profit booking on Reliance Communication, but the last 2 days the strength has come back. Today also the stocks, however, off days high, but it's still holding about in the green as of now.
Okay, so watch out for RCOM in the session, but I dare say watch out for some of the metal names as well. And Hadrien, I don't know if we spoke about these names, but I was looking at stocks which are at new highs, and JSW Steel and NMDC fall in that list. Any thoughts here?
Yeah, sure. NMDC looks very impressive on the weekly charts. In fact, this is the week that it has actually broken out pretty convincingly. And if you see the volumes, it has actually surpassed several months, average traded volume. So that is a huge number, that I can see currently. So NMDC should, if you have a long 3 to 6 months perspective, it's quoting close to 160, 162 odd levels. But I think if a trader has a 3 to 6 months perspective, it is definitely on the verge of rallying towards the 190 levels, 195 levels. Whereas the risk reward also seems to be in favor. In fact, the weekly chart breakout is nothing but a cup and handle kind of a pattern breakout. So this even actually serves and brings in more confidence on the breakout that we are seeing. So JSW Steel has run up a lot, but NMDC has given a fresh breakout. So I'll go with an NMDC with a 3 to 6 months perspective.
And Hadrien, a word on Praj Industries, or for that matter Sterlite Tech. Both of these stocks have hit new highs.
Yeah, Praj Industries, if you see the daily charts, has already broken out from this flag pattern, and flag patterns, once we see a flag pattern, stock starts moving in a very fast pace, in the direction which it breaks out on. So in terms of Praj Industries, it has broken out on the upside, and we've seen a very fast move. which has taken it to a fresh lifetime high. So I think this momentum will definitely continue. Although there is a slight bit of volume, that is lacking, but I think that will come up later. And I think Praj Industries will definitely extend this rally that we are seeing. In fact, the target is coming almost close to the 145, 150 mark in the next month or so.
Okay. Sarvendra, one last question on Reliance Infra. While the Reliance communication is correcting and probably most traders are ignoring it now because all these information is priced in, what's your call on our infra, which has moved up with good volumes today?
Yeah, I think when we look at the setups that were happening over the last 15-20 days, the volumes have been very, very brisk. There's no doubt about that. But what concerns me here is the average deliveries as a percentage have been very, very low into this move. And so I would say I would be circumspect, but definitely the 550 is a level which it has broken out of. So as long as it stays above that, the overall setups would remain bullish. So anybody wanting to enter from here, you should be keeping a stop below 550. Essentially, ideally, it would be a 548 kind of a stop which you want to keep here. And look for a trading target of around 610, 630. That bracket, that range is possible here. But yeah, these, especially Adani, not the Adani names, the Anil Ambani names typically have this characteristic of low delivery volume. So I would definitely be cautious while trading them.
Okay. Thanks, Sarvendra, for joining us today. Let's look at some more stocks that have been doing well. Philips Carbon continues to move up today as well, and volumes are also significantly high. The stock is up by around 7% now, as I see it. So this has been a consistent mover in this market. You also have Titan inching up further, above 900 once again. Around 2% gains today, maybe some more position building also.
Yep, and it's trading around its fresh high level, so there's no stopping for this counter. Just two stocks before we get to the dealing room check. VIP Clothing is the one which has just gone up. That's up nearly 13%. And you've also got a stock like Umang Dairy that's up about 17% now. So just 3% more to go for it to get locked in upper circuit. That's Umang Dairy's up almost 17%. But it's that time of the show when we get you the dealing room check. And let's go across to Yatin as well as Darshan to find out what are the dealing room suggesting today. Yatin, over to you first.
Thanks for that, Navneet. And the first stock is SBI. That is one stock. And in general, after the rally that we saw yesterday, we are looking at some selling which is happening in the PSU banking space. So this is one stock wherein dealers are indicating that PSU mutual funds are sellers in trade. So, a lot of domestic fund selling is what we are seeing in SBI. Also, watch out for Just Dial, and on the basis of future and option trends, this is one stock wherein dealers are recommending a BTSC 7% up for that stock. And remember, recently we had HDFC Mutual Fund which has bought into the share last quarter. And finally we have in the cash market segment Anantraj. That is one stock wherein dealers are expecting a short-term 10 to 15% upside on the back of HNI accumulation which is seen in the counter. But Darshan has a few more stocks to talk about.
So basically as a basket, alcohol, liquor stocks are something that are doing well. Look at the moves that have come in, and mainly the reason is the stellar set of numbers that GM Breweries came out with. Even last quarter when GM came out with numbers, there was significant amount of traction that was seen as far as some of the alcohol stocks were concerned. Counters like United Breweries and United Spirits were trading higher. The next stock that's been spoken about is Sanghi Industries. A couple of two domestic brokerages are actually recommending this stock to their clients as a potential long-term pick. So this has been spoken about. And Max Ventures, again, it's up almost 4%, but what we hear is some of the HNIs are actively accumulating the counters. They believe that there could be more traction that could come in. So that's what we are hearing.
Wow, watch out for this one as well. Max Ventures is up about 4% in the session today. Thanks for that, Darshan. It's been a long time that I've really heard anything about Max Ventures. Do you track this one fundamentally, Rajat? Max Ventures?
Yeah, Neeraj. So Max Ventures as a stock, I think did really well post the demerger of the three companies that happened. What Max Ventures got was basically just packaging and packaging material. So that's the business they're into. I personally like Max, the hospital company, a lot more. That's something we have minor allocation in our portfolio to Max India, which is a hospitals company. Not Max Ventures really.
Okay. Hadrien, any thoughts here? Max, it's not typically a trading stock, but when it starts moving, it makes a really big move, and it looks like it's had a good move today.
Neeraj, I really don't, keep a close track on this stock, but today's move has been pretty strong, and I think this move can well get extended in the next week as well. So, any kind of short-term trader can comfortably hold on to long positions.
Okay, but it's 320, Rajat. So if you don't track Max, let's try and ask you about your top call for the day today. A BTST or STBT as the case may be. Sorry, Rajat, I meant Hadrien. No, I was not asking a BTST to Rajat. Hadrien, your top call for the day today.
Yeah, I'll go with the NID technology. If you see, the stock has been consolidating since the end of October, and today is the day for the first time we've seen NID technology actually breaking out of that consolidation phase. So the predictions of the breakout are indicating that the stock is well on its way to hit the levels of 690 to 695 in the coming week, and one can keep a stop loss of close to 658 odd levels. So yeah, NID technology is something that you can vouch on.
Okay, so those are some of the calls, but clearly from the broader markets, there are a lot of stocks which are moving up. Let's just pull up Indo National Limited. It's touched its fresh 52-week high. Company with an overall market cap of around 400 crore. That's locked in upper circuit with gains of 20%. We highlighted Link Pen for you. That too is locked in upper circuit of 20%. And McDowell Holding is the other one. I guess this is the stock which is active since the opening session today, so that's up another 13%. Rajat, anything in the broader markets, because there are a lot of themes which are going up. There are days when you have the fertilizer stock, paper stock, sugar stock. Today is the day where we've got a couple of your mid-cap cement counters going up. Any of these themes where you're bullish on?
Yeah, I think going forward, I'm really bullish on metals and pharmaceuticals. Pharma, because the way they've fallen in the last about year or so, I think they've reached a point where I don't see any downside from this point. But again, you'd look at stocks like Lupin and stuff, you'd feel even at 1,000, 1,200 levels, I would have said the same, that there's no downside to these stocks. But metals, again, after many years, you're seeing metals, the whole commodity cycle reviving. So Steel Authority of India and MOIL are the two stocks which I've spoken about earlier also on your show. They've moved up since then. But I think given the way, let's say manganese prices have gone up, all of that has not got factored into MOIL. And similarly, Steel Authority of India, if you're looking at anything in the steel basket, this is one stock which has the most manageable levels of debt. It's the biggest steel company in India. And it's coming out of a multi-year low. Now I know since we first recommended, the stock has gone up to by about 40-50%. But even here, I think it's available really cheap. Anything below 100 rupees for a Steel Authority of India is you should definitely buy these stocks in your portfolio. So both these sectors, I was listening to somebody talk about value. I do believe that there's a lot of sectors where there's growth, and that's the reason why you should buy them. But there's a lot of sectors right now, even in an overvalued market, where there's a lot of value. I think pharmaceutical and metals both fall in that category.
Rajat, some of these stocks that are very popular with our viewers include Syntex Plastics. And today the stock is up by 5% with above average volume, but such days are few and far between, and then people just get stuck and they keep sending us queries what to do with Syntex Plastics now. What's your call? Do you think this is a good story that one can hold on for medium to long term?
No, I really don't think so. No, first of all, I think a lot of these mid-cap stocks in an overvalued market like what we have right now, when the correction happens, they actually correct fairly aggressively. And Syntex, again, has been facing a lot of competition. There's a lot of peers that have come into the market. And personally, I believe that story was long over. So I've not really looked at this sector or this stock for a very long time. But in general, broadly, a lot of these mid-cap, small-cap, when they move the way they move, it looks quite exciting. But then, when markets fall, this is where aggressiveness is the maximum in terms of selling pressure. So I would actually be very careful on these stocks.
Okay, so that's the avoid call coming in, at least for now, on this stock. When we are approaching the last minute of trade today, some of these stocks which have corrected, look at Orient Pro, that moved up yesterday quite a bit, is down by 5 to 6% today. Finotex Chemical is also one such name that has been moving up for several sessions, gained some 40-50%, but is now correcting for third day in a row. And the stocks that go up with upper circuits every day come down with lower circuit every day as well. That is what is clearly visible on this one. Symphony has gained 16%. This is your favorite stock, Neeraj? How did you miss it?
Yeah, I saw the stock at the same time, 15% at life highs for itself. But that's a price of 2,000 for Symphony. That's a sudden move there. And this is not usually a stock which moves like this.
Yeah.
So I don't know what's happened here.
On very high volumes. Yesterday, the total quantity traded was around 7 to 8,000 crore. Almost 82,000 shares have been traded now on NSE. So it's gone up on high volumes as well. So that's a good sign.
Yeah, good going for this one. Any thoughts here, Hadrien? Symphony, it's not a trader-friendly stock though.
Yeah, Symphony, I just had a quick larger time frame chart check, and what I can see is a very huge breakout on the monthly charts, and this is the second consecutive month it is moving higher after the breakout. If you go back a little bit, if you check the October 2013 lows, since then you've seen Symphony non-stop running till the April 2015 highs. And we didn't have, we had very few months, down months, if I may say, in Symphony. So I think Symphony is all set to do that, what it did between 2013 and 15. The breakout is so huge that we may see such move going forward. So it's difficult to put a target number on this, but we could see the stock moving towards the 24 or even 2500 levels in the next 3 to 6 months.
Yeah, Pradeep has a pertinent point. We should start looking at 104 weeks because this time around, almost all the stocks were coming off their 52-week lows. That's for certain.
This has been like a bull run, which doesn't really have a precedent, because for a large number of stocks in mid-cap and small-cap space, you have not seen even 1 month down. So every month they have been hitting a new high since last November. That is November 16 actually. So that's why when you look at it now, your 52 weeks low would be exactly 365 days from today. So last year, same date.
Yeah, and this has been a bull run, unlike others, in a way that in a lot of bull runs were in a synchronized bull market going on and across markets. India had a temporary blip in November and December, and a sharp one at that, while the other markets charts would have remained steady. So there's a bit of a dichotomy, and then the recouping was pretty swift as well. So in that sense also, it is a lot different from what you would have otherwise
seen. So whatever correction had to happen, it happened with demonetization and Trump coming in. So the correction got over there, and then you just have the up move.
Yeah. Okay. In a moment from now, we'll start wrapping up the markets as well. Just one last thought from you, Hadrien. The Nifty Bank is now very active, overtaken the Nifty in percentage gains. Is there a strategy here?
Yeah, definitely. Like the Nifty, Bank Nifty also would be a buy. But my only concern here is the PSU banks that are actually dragging, especially SBI, the heavyweight. Leaving that apart, Bank Nifty will definitely be a buy because the private banks are showing very good momentum from here on, and I think they will lead the rally that we may see in the Bank Nifty. So, one can go long in Bank Nifty, and your short-term target, or I may say the resistance, will come close to the 25,780 zone on the upside.
Okay, let's start wrapping up the markets and start off with the large caps, as would be the norm. Navneet is waiting by with those details. Navneet.
Well, Neeraj, we conclude the first week of 2018, though we started off not on a very great note, but I'll say it's been a great week because we're closing in the positive, and not only that, it's all-time high closing for Nifty. 10,560 is the mark where it is about to close. Sensex to around the all-time high levels, higher by 212 points. And for Bank Nifty, which you just highlighted, I'll say it's a very positive closing because it's closing above the mark of 25,500, which most of the technical analysts were watching, and good gains once again from the broader markets. Nifty mid-cap free float index up almost 1%. The small cap index also seeing the same amount of gains, and the BSE small cap index has seen gains of almost 183 points. Let's look at the Sensex constituents then and see which were the stocks which contributed the most. Well, you can see more of green on the screen today, so a good day to end the week. Yes Bank, the counter was pretty active right from the word go in the morning, closing the day with gains of 5%. Adani Port, in fact, the entire Adani Group stocks have been quite active this week, gains of 3.7%. Your heavyweight IndusInd Bank also performed pretty well. The telecom stocks were active, so Bharti Airtel gained in the second half of the session. That was up nearly 3%. HDFC, another heavyweight. TCS did pretty well, and also you had stocks like Tata Steel, which continues to go up. ITC, another heavyweight on the index, did well. HDFC Bank also was up and about. On the losing side, very few losers, I'll call it. ONGC was your top loser. Wipro down almost 1%. Among the heavyweights, you had stocks like State Bank of India, L&T, and ICICI Bank, which ended the day in the red. Pradeep.
Yeah, and if you look at the mid-cap names, GM Breweries is the one stock that we have been talking about since morning. Excellent set of numbers, and towards the end, it finally hit the 20% upper circuit. As you can see, Symphony was, although a surprise gainer in last half an hour of trade, stock moved up by 13-14%, finally ending the day with gains of almost 18%. Subros is a stock that we discussed in detail during this show, and we also spoke with the management. But look at the last minute move here, and this stock also logged at 20% upper circuit. Some of the mid-cap names would include mid-cap cement like Prism that went up. We also had some interesting gainers like Pokarna that traded strong through the day, finally closing with good volumes. Idea continued to move up for second day in a row. And while Jan Irrigation is of course barred for fresh positions in FNO, Jan Irrigation DVR continued to move up, and it gained around 8% in today's trade. A few losers, just two that I would like to mark because they moved up quite a bit earlier. Orient Green Power, the stock has been moving up for a few sessions now, lost heavily. Significant selling pressure here, down 7.5%. And also Orient Pro Solution that had gained yesterday is down in today's trade with good volume. So looks like a little bit of rotation. A few stocks that had moved up significantly have seen some selling. Otherwise, very strong market breadth.
Yeah, and that sums it all actually. There's nothing more to add but for the fact that I can bring up what's happened to the top contributors list, and 2 days in a row now, while we closed at live highs, 2 days in a row now, we've had good solid gains at the large cap end of the market. This is the contributors list. Some small downticks that have come in from not really constructive downticks, just an iffy move for the likes of SBI and ICICI, but really strong move for Yes Bank in the session today. It's not normally that you see a weightage of 1.5% contributing so high to the Nifty move, and that's virtue of the kind of move that we've had in Yes Bank today. But banks and financials by and large, Bharti Airtel doing well, and maybe I spoke too soon because yesterday I was talking about how we didn't need the HDFC twins to contribute to the market move, which was the case yesterday, but packed. HDFC's come back and top of the pile, up, contributing about 9 odd points to the overall move. So good going really. And for the week as well, if I can just pull up what the week has done, you will see that we didn't need too many banks. State Bank of India maybe, but the likes of Coal India and some of the others were the best performing stocks. So Coal India up 5%. Yes Bank courtesy today's move. Otherwise it was nowhere in this list. But Tata Steel, Adani Ports, L&T, we haven't had too many large banks contribute. So the HDFC twins are missing from here. Reliance Industries is missing from here. So the non-ITC is missing from here. And yet we've had a fairly decent week with the Nifty, while contributing only 0.2% because of the yo-yos that we've seen. But the last 2 days looking very healthy, and we're ending at life highs for ourselves. Some losses that came in for the oil marketing companies and auto names like Eicher and Maruti Suzuki, but that was probably par for the course. Anyways, final thoughts from our experts. And Rajat, if I may, oil shooting up the way it is, while it has an impact on the fisc and the macro and so on and so forth, the listed space doesn't seem to be too worried. We're not seeing downstream really correct too much. Yes, the OMCs have gone down a bit, but nothing too dramatic. And the same vein, aviation is not getting impacted. ONGC is only showing a marginal uptick. What's happening here?
No, so I think that's primarily because, in bull markets, large caps like these don't fall that much because essentially a lot of these stocks are held by mutual funds, and then, basket selling does not happen in these stocks when market is going up. So even if crude prices, keep rising, maybe individually people won't buy these stocks, but most of the stocks that you've spoken about, there's a lot of money going consistently into these stocks via, your SIPs and lump sum investments in mutual funds. But personally, we've spoken about this last time also. I'm actually staying away from both exploration companies and oil marketing companies. We have recently added Mahanagar Gas to our portfolio. So both IGL and Mahanagar Gas, I think, are better bets to buy in the energy space right now. But in terms of what stocks could do well going forward from here, a lot of the stocks that you just spoke about, which did not make it in the list, which did not sort of pull the Nifty up. You were talking about Infosys, ITC, I think Colgate Palmolive. A lot of these consumption-themed stocks, they've not really done much for a while. And my sense is that if market keeps rallying like this, that's where you'll see, these stocks will come in and, take Nifty to newer highs if that has to happen.
Okay. Hadrien, one stock that you would like to trade next week?
Yeah, I'll go with Dr. Reddy's. The stock is actually, after a long consolidation, broken out from this typical cup and handle pattern breakout. And today's move has actually confirmed that we have broken out from this pattern, and in fact also closed above its long-term 200-day moving average after a long time. So I think Dr. Reddy could be a good bet in the coming week. You can expect target of 25.50 from here on, and your stop losses should be close to 24.20.
Okay, Hadrien, as well as Rajat, thank you so much for joining me today and giving us your thoughts, and have a great weekend. By the way, for cricket enthusiasts, after being 13 for 3, South Africa is now 70 for 3, so they are fighting back. But this is one match that people would want to watch the whole weekend. We'll give you some more updates before we end the show. For now, let's take a very quick break. Come back with some more details on the markets on the other side.
Are we live? Welcome to programming that's insightful, authoritative, and at your fingertips.
Bringing news alive. So immersive, so new, and so addictive. You will want it no other way.
The Bloomberg Terminal, accessed only by over 325,000 marquee investors across the world until now.
Business news, we're news for business people.
welcome back. You're still watching Countdown with us on Bloomberg Quinn. Well, it's now official. The Finance Minister Arun Jaitley will present his fourth Union Budget on the 1st of February. Parliamentary Affairs Minister Anand today said that the budget session of Parliament will be held from the 29th of January till the 9th of March. The economic survey will be tabled on the first day of the session. The railway budget will also be a part of the Union Budget, just as it had been the last time around. In fact, the indirect taxes will also not be included in the budget, since the GST Council is now the nodal agency empowered to fix the rates.
Moving on, consumer companies claim demand is back, and they have data to show that more products have left their factories, but that's just half the story. Distributors across the country claim that these companies are pushing out their goods into the supply chain, which is then gathering dust at the warehouses. Charlene D'Souza, who has been speaking to some of these distributors, joining us now for more details. Charlene, what is the inventory level right now?
Consumer goods makers say that demand is back to normal after demonetization. However, distributors have a very different narrative. They say that the demand remains stagnant at the consumer end, while companies keep pushing their products down the supply chain, which has caused their inventory carrying days to increase by nearly 50% in the last 1 year. Their inventory carrying days prior to demonetization was in the range of 7 to 10 days, which has now gone up to 15 days. In smaller towns, distributors' inventory carrying days is almost up to a month. The emergence of modern retail has also caused consumers to move to buy from these stores, which has caused distributors' inventory days to increase in urban areas. Distributors typically supply to Kirana stores. India's largest consumer goods maker refused to comment to Bloomberg's query, as they are in silent period. While Godrej consumer Mondelez Britannia have not responded to Bloomberg Quinn's mail. Dabur India said that their inventory has in fact reduced considerably. They have also seen demand coming back to normal. Wipro Consumer told Bloomberg Quinn that it follows best-in-class trade practices, and they have a robust mechanism in place that enables distributors to share grievances, raise issues about wrong dispatches or return of stocks. These are addressed promptly and with alacrity.
Charlene, for all those details. Well, moving on, earlier in the day, we caught up with R. Subramanya Kumar, MD and CEO of Indian Overseas Bank, and former ICAI President Amarjit Chopra, to understand the ramifications of the bank's move to write off losses. While Mr. Subramanya Kumar attempts to calm nerves, saying this is just an accounting practice, Amarjit Chopra says he's worried other banks under the PCA may follow suit. Listen in to a slice of that conversation.
If you look at the balance sheet, you have a short premium on one hand and other things accumulated losses on the other. Ultimately, at the end of the day, the net value which is remains constant. It is a question of an accounting practice which we wanted to say in order to bring in a true and fair picture of the balance sheet, which will facilitate the investors to take a well-informed view about it. Rather than telling them that you have on one hand a plus and on the other hand you have a minus, that we are setting it off. The second, there is a true and fair picture of the balance sheet, which is permitted as per the regulations as per the Act, which we wanted to make use of it in order to bring value to that our investors who will be able to do the dividend much earlier. This is one important factor which was considered while doing it. This is a fair point.
Okay, I'll correct my language then. I won't say write-off. I'll use the word set-off, sir. Did you have to seek RBI permission to be able to do this? Because by all measures, at least by our understanding, this is a fairly unusual move.
Yeah, I would say that all the permissions which are required to do this has been taken.
To understand this better, we're also joined by former ICAI President Amarjit Chopra. Mr. Chopra, good morning. We have with us the IOB chairman on the line as well. He's just explained and he's corrected me and said that it's not a write-off, it's a set-off of the losses versus the amount in the share premium account, the securities premium account. And this is in order to present a fair and true picture of the balance sheet. Mr. Chopra, you've got decades of accounting experience. Would you say this is an unusual move, sir?
It is definitely an unusual move. There is no doubt about it. At least if I look at the company that does not permit this kind of a treatment under any circumstances. But if I look at the Banking Regulation Act, and I also look at the banking's undertakings when this transfer and acquisition occurred. If I read the Section 3 and Section 17, probably there is some way somewhere, and but of course that has to be with the permission of the Reserve Bank of India and the other regulatory authorities.
That's exactly the question I had put to the IOB chairman as well. Sir, you confirm that you have received RBI permission?
I would like to just correct her. If you look at Section 52 of Companies Act, where there is a provision, although the banks have not been covered in the Companies Act, you draw the parallel either in the BR Act or in the Nationalized Banking Act. The BR Act provides for, as said about Section 3 and 17, if you combine together, there is a way out for it, and there is an RBI circular of 2006 which specifically spells out what are the actions to be taken. So the Indian Overseas Bank has taken the relevant permissions wherever it is required to be taken.
Mr. Chopra, one final question. Would you be alarmed if you saw other banks do this as well? Do you think this might in fact become a trend?
I'm definitely alarmed. There's no doubt about it, because I had personally feel once this is one of the precedents which will be used by all other banks also now.
Okay, let's move on. The total assets under management dipped 6% in the month of December, while mutual fund holdings saw a total outflow of 1.6 lakh crore. Let's get in Jayesh Khilnani, who has pulled up an interesting trend on this. Jayesh, over to you.
Well, December turned out to be a speed bump on a long drive. So if you have a look at the total assets, how they changed for the entire Indian mutual fund industry, the total AUM dipped about 6% at nearly 21.4 lakh crores. Now, what has led to this fall, or what contributed most to this? Let's have a look at that. The money market or the liquid schemes, that the AUM declined as much as 31% to hit almost 3 lakh crores. The biggest AUM, as per category, that was the income fund scheme, which declined about 7% and, just had 8 lakh crore figure for the total assets under management. The equity and the balance funds, that did really well. So the equity AUM climbed 5% to nearly 7 lakh crores, and the balance funds category jumped almost 8% at nearly 1.7 lakh crores for the month of December. Now let's have a look at how the flows picture actually changed. If you have a look at the total outflow number for the month of December, that stood at about 1.64 lakh crores versus an inflow number of 1.26 lakh crores in the month of November. Now, what contributed to this outflow was majorly money market, which saw an outflow to the tune of 1.27 lakh crores versus an inflow of about 77,000 odd crores. If you have a look further at the income outflow, that was to the tune of 60,000 crores versus an inflow of about 9,400 crores. The equity side, again, that did well. However, the inflow declined a tad bit at about 24%. It stood at nearly 15,000 crores versus the inflow of nearly 20,000 crores that we got in the month of November. Balance funds, once again, this made a jump of about 28% at nearly 10,000 crores versus 7,600 crores for the month of November.
Interesting. Keep in mind, no alarm bells and nothing to do with the equity markets per se. Got to do a lot with the liquid funds and the withdrawals that we saw thereof. Okay, European markets, they've been trading with a positive bias, with all indices trading with gains. Bree Taylor-Johnson from London stood here with the details of the equity market action witnessed in Europe this early morning. Good morning to you, Bree. How's it looking like?
So we're continuing to see a stellar start to 2018. European stocks are up again this morning. The Stoxx Europe 600 is being led higher by automakers, and we're also seeing healthcare stocks outperforming. Now, higher European equities come off the back of a positive session in Asia, where benchmark indexes in Japan, South Korea, and China were among the gainers. And this also comes after U.S. shares surged to fresh records yesterday. We're seeing U.S. futures pointing upwards right now. And emerging market equities, they reached the highest level since 2011. We've just had some fresh data out of the euro area. Inflation slowed to 1.4% last month from November's 1.5%, and the underlying rate unexpectedly failed to accelerate, instead holding at 0.9%. Now, investors will turn to the U.S. jobs report and the release of non-farm payrolls and unemployment data for December, which is out in just a few hours. We're seeing U.S. Treasuries, they're edging lower, and the U.S. dollar is strengthening ahead of that data. And finally, commodities are falling as oil pulled back from the highest close in more than 3 years. So that's what we're watching here in Europe. Back to you.
Well, thanks a lot for that. Okay, speaking of corporates, Thyrocare has its eyes trained on underpenetrated markets like Uttar Pradesh, Bihar and Odisha. The diagnostics chain wants to use this as a hedge against the growing competition in the existing geographies. This is what the CEO, A. Velumani, said in an interview to us earlier. Here's a small slice of that conversation.
See, the major players have competition coming up new into the space. Because the two listed companies, PE multiples are very impressive. A lot of money is getting poured into other players, thinking that all of them would be there. So there is a cash burning activity happening in the space of diagnostics. Having said that, we have a comfort of EBITDA. If there is a necessity, we can dilute.
Sure.
As of today, the growth, if it is 25% plus or minus 2-3%, we need not dilute it now. We can wait till there is a compulsion to do it. So the comfort is there, the growth is there. This year, in fact, our EBITDA is bit better than even last year. We are holding on. We are not diluting as of today.
That would mean that you are happy with the way the growth rate is. I mean, 1% or 2 or 3% here and there can always happen, but you would be comfortable, which is why you don't need to take those price cuts in order to attract more customers.
We generally look at what is happening to the top 10 players' growth. If any of them are growing faster than me, then I need to look at whether to continue the same EBITDA or to sacrifice there. As of today, our company's growth is, in my perception, bit better than the industry, bit better than the top 10 players. So I am continuing to keep the same pricing, same profitability. And because the volumes are growing, the profitability, EBITDA wise, is better.
Okay, I've stopped hearing those ads. Is it that I'm listening to less radio? The bell and think thyroid.
Yeah, we were spending little higher side in the last year. I don't think we can continue to sustain that, nor people would love to hear it too often. But we would be coming back with a budget of roughly around 10 to 12 crores in this calendar year too. And spend that much amount is needed. It is heard, but less often.
Okay, and would you need to do this, if at all you go up and do it, only to increase penetration in the markets where you're already strong, or would you want to now start looking at more aggressively the markets where you're relatively not as strong? I would presume South and to an extent West would not be as strong as some of the other markets for you. And correct me if I'm wrong.
For me, being a South Indian, South is strong.
Right.
Sitting in Maharashtra, West is strong. For me, the weakness, not only for me, the entire medical industry weak market is East market. So the UP, Bihar markets are little underpenetrated. So is Orissa, Rajasthan. So there we will be investing some more money so that states also we have a market share which is matching with that of the Western India.
No, but please correct me, sir. I remember, again, drawing from a last conversation that we had, wherein you had mentioned that the scope of growth in the existing markets also is fairly immense.
Absolutely.
So my question to you is, would you want to grow in newer areas where the penetration is, or where you have relatively lesser, what do I say, market share by and large, or would you want to penetrate the areas where you are already established and want to lever more? What is it that you would do?
See, every market has some growth phases. For example, Tamil Nadu and Kerala were doing very well. You reach a saturation.
Okay.
Then you don't find a year-over-year growth anything more than 15-16%. Somewhere else it was doing only 10%. Now that market grows to 25%. So we look at India as 8 pin code market. And we start focusing on that pin code which was not doing well last year, and then grow that pin code. So there is a kind of different channels. One man milks the cow which is milking, another man finds a cow which should milk.
Right, let's move on to some global news. South Korea says that the North has accepted its proposal to hold talks aimed at reducing tensions ahead of the Winter Olympics. Bloomberg's David Ingles speaks to Peter Pei to find out more. Listen in to this conversation.
South Korea says that the North has accepted this proposal to hold talks aimed at reducing tensions ahead of the Winter Olympics. The date has been set next Tuesday. That's January the 9th. Let's get it over to Peter Pei. He's a Bloomberg Seoul bureau chief. He joins us from there right now. And Peter, it was quite a development.
Oh, significant. They restored the hotline that was on hiatus for about 2 years. And the fact that North Korea messaged back on this hotline to say, hey, let's do talk on next week is a significant development. Of course, there is skeptics, as to what will be talked about, what will resolve, what will come out of these talks is a good question. There are skeptics who feel that North Korea again is up to some no good, maybe buying some time as they perfect their nuclear weapons. On the other hand, the sanctions may be working. North Korea may be hurting quite a bit, and as a result, they need to reach out and look for a way to thaw relations.
And Peter, this might be a fairly simplistic, simplistic way of looking at this, but what happens after the Winter Olympics? I mean, is that hotline still open?
Well, yeah, that's the $64,000 question. I mean, the fact that they're talking and at this point, specifically at the Olympics, doesn't mean that they're going to continue to have broader, more significant talks on the sort of the geopolitical tensions on the Korean Peninsula. Whether that will continue after the Olympics is again a big question. Right now, as we know, it's primarily to talk about sending North Korean delegations to Pyeongchang Olympics, which is 50 miles from the border, and that's at least temporarily reduces some of the tensions and possibility of any hostilities breaking out. After that, it's anybody's guess.
Yeah, it really underscores that adage that sports sort of brings down all sorts of barriers. Now, I just want to pivot to trade here, Chorus. Now, does this actually complicate or does it help these talks between the U.S. and South? Because we know, of course, President Trump is looking to perhaps salvage or save the deal between America and South Korea.
Yeah, again, it depends on what the outcome of these talks are. I mean, some view this overture by North Korea as a way to put a wedge or a rift between South Korea and the U.S. And if that is occurring, and if there are disagreements on just the political nature of the tensions here, that could pretty much create a greater tensions or even maybe more demands from Donald Trump, for instance, who has criticized the trade deal, and it could come down hard on the trade agreement. It could turn actually worse for South Korea if North Korea is successful in creating this wedge, as some believe they are trying to do.
With that, it's a wrap on this leg of Countdown from Pradeep, Navneet, and me, Neeraj. Thanks so much for watching, and have a great weekend.